All right. Well, thank you for the introduction, and I'll reintroduce myself for the recording too. So thank you for joining us tonight and for spending time trying to learn about independence. And when we talk about independence, there's so many different ways to think about it. And today we're going to approach it from the financial side of things, from employment, and from kind of a couple of other pieces of building your own support system. As Neil said, I am the Director of Financial Planning at Planning Across the Spectrum, which is actually a Connecticut company, and I am a Maryland resident. I'm out in the Annapolis area, and my focus is working with families who have supported adults who they're supporting and plan to support throughout their lifetime. Different people in our company approach autism and working with autistic adults in different ways. And most of our staff is actually neurodivergent in some way. So we are a company for people who think differently. We are people who think differently. And we specialize in working with families, adults, and employers who value neurodivergent and disabled talent to help them with their financial future, help plan for financial future and for financial independence. So with that, I'm going to kind of start our presentation. I am going to share my contact information later on in the presentation as well. Hello. If you could mute, thank you. So I am at Liz at Planning Across the Spectrum. I'm always open to questions if we don't reach them during the presentation. And our website has a lot of good blogs on this subject and others. So if you want to follow what we're writing about, what we're sharing with families and individuals, please feel free to find us on our website or on Facebook or Twitter, LinkedIn, wherever you are with your social media. We're posting every day is our goal. Sometimes we miss one, and that's what goals are for, to have an aspirational idea of what you want to do. Okay, so I'm going to keep moving here. So making a case for working is really what we want to approach our independence conversation. Now, everyone's not going to be able to keep a job or hold a job for very long. Not everyone's going to have a desire to work, but we are kind of going to approach a lot of this conversation around why working is nothing to be afraid of if that's what's holding you back. So for so many people who have disabilities, who have benefits, there's the concern that working is going to limit their options on what they're able to have by way of supports. And we want to discuss ways how government benefits actually are met there for people to be supported, and that they actually encourage work in a lot of ways. We'll talk about how to maximize those benefits while you're working, and to discuss other things to plan for when you're living on your own, which includes surrounding yourself with your own circle of support. All right, so we're going to go back to this friend who's an animation figure, Jimmy. We're going to kind of be referencing Jimmy throughout parts of the presentation. And Jimmy is an individual who's disabled, and he currently receives benefits related to his disability. And up to this point, he's been unemployed, but he was recently offered a job position at a local coffee shop. Good for Jimmy. He's excited to start working. So we have a local coffee shop near us. It's a Biddy and Bowes that employs people with an intellectual disability and other disabilities. So this is not an uncommon situation. Also, there are many coffee shops that are specifically employing people with disabilities, to just share the gifts that are recognized in some of the people who really like to be out and about in their community and share their hospitality gifts. So Jimmy wants to know how his new job will impact his benefits. So really we have to talk about what are benefits from a high point and from a more detailed kind of perspective, and see what working will do for each of the things that he's eligible for. So there are a lot of different kinds of benefits. There's cash benefits, which we kind of think of as these Social Security benefits. Social Security includes SSI, with SSDI, and the Disabled Adult Child Benefit. We'll get more into that in a little bit. There's also medical benefits as far as insurance goes from the government. And Medicare and Medicaid are the two programs that are related to medical insurance within the government system. There's also other benefits like food stamps and Section 8 housing, and there are other housing voucher programs that allow people with low income, regardless of their disability, to have reduced payments for the things that they need to get by in their life. So we'll get into some of these things in more detail.
Turn the TV off now. Dad.
So the first program we're going to discuss is the Supplemental Security Income and Social Security. There's two different programs, two primary income. Sorry for messing my words a little bit. I'm listening to my son who's upset outside the room that you can't hear, but I can. So I'm sorry for being a little bit distracted. So SSI is that benefit that comes to people who it's a need-based program. So it's for people who have limited income and limited assets. And by limited, we mean really limited, under $2,000 of assets to their name. The income that people can have is countable income. So the countable income is earned income that goes towards someone's eligibility for Social Security. And when someone is earning money, there's a slight reduction in what they would be paid in SSI, but the SSI doesn't completely go away until over a certain amount. We'll get into that a little bit more. When a full-time student, and we want to make sure that we're aware that some of us are going to be students or working towards independence at a certain point in our young adulthood or later adulthood, going back to college. If you're a full-time student, that $2,000 of your earned income will be excluded each month, but even before counting any other of your income. So when we're talking to young people who are starting to earn money, you can be a full-time student and keep more of your income without even counting towards Social Security. This is a very busy slide, and I apologize. But so this is all SSI, where the income and assets are counted towards the program eligibility. SSDI is a separate program that pays benefits to disabled individuals who are unable to work competitively. And again, that's a kind of based on a government number of what they're able to earn in any given month. But it doesn't count the assets that somebody will have in their name. So earned income does not reduce SSDI if the individual is earning under the substantial gainful activity amount. For this year, that number is $13.50 a month. That is counted towards the countable income. And next year it's going up. It'll be $14.70 a month. That is that substantial gainful activity amount. That's the amount you can earn a month without having any reduction in SSDI. And it's that number that you need to be mindful of to keep onto SSI, regardless if there's a reduction in the payout of the benefit as well. I'm going to move forward here and kind of compare the two programs. So supplemental security income, that's the SSI, is paid through by regular tax dollars of the federal tax system. And when you're eligible for SSI, it's very likely that you're also eligible for Medicaid. When you receive SSDI, the SSDI is qualified by working and paying into the system. Technically, when we work, we all buy insurance for ourselves and our families so that if we become disabled or if we retire, we'll have a Social Security benefit. So every working adult who's paying into the Social Security system will be really earning a benefit from the amount of time that we're working. So a benefit can be earned by you yourself while you're working, or your parents when you have a disability in childhood, which most people with autism would be considered a childhood disability. And so the benefit would be earned on the parent's work record, and that's called the disabled adult child benefit. When someone is on, and I think this is actually a future slide, so beneficiaries of SSDI become eligible for Medicare after 2 years of being successfully on SSDI. I'm going to move forward here. So Medicare is a major benefit to our young people with disabilities. And it's a benefit that does not go away. Now, people become eligible for Medicare when they've been on SSDI for 2 years. And then when they receive it, it will be free for the first 8.5 years. After that, if you're earning money or if you have assets that can pay for premiums, then you'll be asked to pay for premiums. But there are a lot of income-based and programs that minimize the amount that you would ever have to pay for Medicare. And even if you have successful employment in the future when you are enrolled in Medicare and receive it as a benefit from SSDI, it's never lost. You can always pay into the Medicare system like any 65-year-old who becomes eligible based on their age. I'm going to move forward now. So SSDI, again, is that income from Social Security that there's no reduction for employment income once SSDI is earned and received. So if you have a benefit that's that SSDI, any income below that $13.50 for this year and $17.70 a month for 2023 is going to be income above and beyond what you're earning through work. There's a full exclusion again of that income while a full-time student up to, again, that $2,400 a month. So that's outside of the substantial gainful activity. So you have that student exclusion, and then you count the SGA number. And that's, so if we were counting that, that's 3,300 $90 that someone could earn technically and still continue to receive SSDI while a full-time student. Now, not every full-time student is going to have the capability to work a full-time job, but they might have some opportunity to do some work once a weekend or some summertime work. But as long as they're fully a full-time student enrolled in classes for the upcoming year, there's no issue with discounting that income as far as the exclusion goes. We also want to talk about income-related work expenses because it's another way that people who are earning money with a disability can remove some of their income as being counted. ERWIs is how we kind of nickname the income-related work expenses, are expenses that you have to pay to enable you to continue working. Sometimes that's transportation if your transportation is directly related to your disability. Sometimes it's out-of-pocket resources for a job coach. Sometimes it's out-of-pocket resources for mental health. And other times it's just the tools that you need to get your job done. So when you're employed in a company, sometimes you'll have those bigger work expenses to continue you to be able to do your job. Self-employment expenses are also ERWIs, and we'll talk about that in a couple seconds after we change from this slide. But there are also work subsidies, which are programs of the Social Security legislation that allows someone who's working less than their peers, but being paid the same amount as their peers to discount the amount that they're being paid over the amount they're working. So if you are working in a company and you're getting paid minimum wage and you have peers who are getting paid minimum wage for the same job that you were hired to do, but it takes you 1.5 times to do the same work that your coworker does, then you're able to discount that portion that it takes you longer because of the resources that you need to support you in your job, to remove it from your countable income, because technically the Social Security recognizes that you're being overpaid for the work that you're producing. Now, this is kind of like a tough thing to consider when you're saying, well, I'm here as long as my friends who are working with me and I'm working as hard as I can. Well, that's true. But the Social Security says that you can use that to your benefit and continue to receive your same benefits and not count the full amount of your paycheck towards Social Security. And they want you to continue to be working and supported in your workplace. So these are all the 3 programs here: ERWIs, the income-related work expenses, ERWIs within self-employment, which we'll get into in this next slide, and work subsidies are very important programs to be aware of when you're working to feel as empowered to continue to do the work that you need to do with the supports that you need. Okay, so here's the note on self-employment. So a person who's not financially conserved can own a business. So if you're not under conservatorship, you're able to make financial decisions for yourself. You may own a business and exclude all expenses related to the business as an income-related work expense. What does that mean? So if you have, in this picture, we have a woman potting flowers and things maybe for display. Maybe she's growing those flowers, and maybe she's selling them out of her home. All of the jars, all of the seeds that she buys, all of the classes that she goes to learn about what she's doing in her business, all of the travel that she does to speak about her experience owning a business, all of the business coaches that she consults with, those are all income related work expenses. And while her income still might not be gigantic, she can still receive Social Security and have that income from the business and discount everything that she's doing to empower herself to live the life that she wants while owning a business. It's very, very powerful when there's a skill set that someone has to sell within a self-employment operation, to be able to basically use all of the income that's over Social Security and over what you need to live on to put into the life of the business itself, and to really have that life that you really care for and care about. As long as Social Security can be maintained, as long as the person's not working over 45 hours a month in the business. So that is the trick here. They still want to be, they're still aware that this person has a disability, that they can't just go out and do this 40 hours a week and own this business, because then they technically don't have a restriction on their ability to work. But if they are not putting more than 45 hours a month, into the business, then they're still being qualified as a disabled worker who's not working competitively, regardless of the income that the business brings in, regardless of how many expenses that are coming out of the business to empower the individual to continue learning and growing and pursuing their dreams of this business. SGA then is actually counted annually instead of monthly for a business owner, because that they respect that business owners have variable cash flow when they're selling products and selling products, their thoughts, their ideas. They know that those income streams can be kind of all in one season or all kind of staggered. Some months are going to be better than others. So they allow the business owner to compile their income for the year and divide it by 12. That is not the case for normal countable resources, and not the case for normal SGA, where they do count it each month based on your actual income earned. The Social Security Administration and the IRS are two different things. So when we're talking about discounting your income for IRWI purposes, not all of those expenses may be deductible on your tax return. Not all of those expenses will make a difference on your tax return. And you still may owe taxes on the income that you earn. So you just want to be aware that there are still tax considerations that you would want to review. Make sure that you're not overextending your income towards expenses before knowing what your end of the year commitment to the IRS is going to be. Okay, I'm gonna look at the chat if we can address some of these questions if they're related, and see if we can kind of answer some of these here. Okay. So we have a question here about self-publishing a book, and somebody paid to have it edited and published and has not made a lot of money on the book. Will this be counted against her SSI? Royalties from books are specific. I don't know the specific answer to that, but it is kind of on the self-employment side. There's a potential that the sale from the book, again, will be kind of spread out throughout the year and not taken all in one chunk. And so that's how I'm anticipating it working, but there are specific rules about royalties that I would want you to kind of look at and do a little research on. There are, believe it or not, SSI is wanting people to work, and they are wanting people to do the things that are meaningful to them. And they do have some rules that allow and empower people to do that. And they have specific rules related to really these variable income streams. And I think that's just something to be aware of. It's hard to believe that Social Security Administration is doing good for people when you get a lot of frustration on reporting income and back and forth about qualifications and everything. But they actually do have some rules to be helpful in these cases. I'm going to move on here. Okay. So here's Jimmy again. So Jimmy is on SSDI because his father retired and started his own Social Security benefits. And Jimmy had a childhood disability, so he's receiving what's called the Disabled Adult Child Benefit of SSDI. He's now receiving both Medicaid and Medicare. If Jimmy only makes $13.50 a month, there is zero reduction to any of his benefits. If Jimmy makes over $14.70 a month next year, he may lose his SSDI, but it's likely that he'd be making much more money through his salary from his job than he was in from SSDI payments. Now, this isn't always the case, and you want to make sure that when you do think about working more, that it's done with a plan. But let's look at some other things to consider here. Medical insurance is one of the biggest things that we're planning for when people need their disability to continue, or Medicaid itself. So Medicaid is going to be the program that not only applies to medical benefits, but also includes all those the supports that allow you to continue working, that have you allowed to give you professionals to work with, to support in job coaching, to support in independent living, and have those kind of professionals help you wherever you are in your journey towards independence. Medicaid is paired with SSI when you are eligible for SSI or likely eligible for Medicaid. So if you're not already enrolled in Medicaid as a child, you should apply at 18. And here's one of the places that you can apply for Medicaid. Medicaid is also an asset or reduced or asset countable resource. So Medicaid requires that people have under $2,000 in their assets. The Medicaid programming includes these waivers for job and independent living support. And these supports can be applied for individually. The waiver supports themselves on the mymdthink.maryland.gov to see what programs that you would be eligible for, your family member would be eligible for. Jimmy has always been eligible for Medicaid due to his disability. But with Jimmy's new job, he's going to be working, he's going to be earning more money. He's now eligible for the employed disability, individuals with disabilities, or the EID. This is the same medical insurance from Medicaid, but it gives him the allowance to work and to earn more money. In this case, Jimmy will not see any decrease in his medical benefit or his waiver benefits. He does need to apply to be considered for the program. And I'm going to go through this here. So the benefits of the EID program is that if you make under, you can make up to $73,000 a year and still be eligible for the Medicaid programming of the state of Maryland, as long as you have assets under $10,000. Again, that's going to be increased from the standard Medicaid allowance of $2,000 in your name. So when you apply and are approved for EID, you can start saving more money, you can start earning more money, and then keep the Medicaid waivers and the medical insurance that you have through Medicaid. You can also be enroll in retirement plans, and those retirement plans will not be included in the asset limit. It'll be outside of the asset limit. This is only when you're on the EID program. So with EID, you can add unlimited funds into a retirement account, such as a 401k and a 403b. In Maryland, I have not seen the ability to save into an individual retirement account or an IRA with the same rules. But if you are working for an employer, or if you establish your own 401k when you're self-employed, you are able to not only contribute to those plans, but also have them removed from any future countable resource when you are on the EID program, and they won't be counted towards Medicaid in the future. On top of that, if you have an ABLE account, you can save as much money as you want, and it will be available to you whenever you want, not just in retirement. I think I have more on ABLE accounts later. We usually go over ABLE accounts. I believe I do, so I'm just going to keep moving. But until then, we'll touch on that a little bit later. So Jimmy is enrolled in the EID program because he makes under $73,000 at his coffee shop job. I expect he would. He probably would be earning closer to minimum wage with a couple tips in the jar. And he has under $10,000 in assets. Jimmy adds funds to his employer-sponsored retirement plan because they're giving him a bonus, a match of 4%. And so that's extra money he can keep in his employer-sponsored retirement plan. And that's not actually counted as income towards him. That's just a retirement match that the company has to give to him because that's their internal plan language. And he's also contributing to an ABLE account without any consequence to his medical benefits. Even if Jimmy is no longer eligible for the EID in the future, as he goes through his work, the money saved in the retirement account will always be excluded for Medicaid purposes. I'm going to say one thing on this. So the account is what's registered with the state. So if you do move on or off of Medicaid benefits and think you might need it in the future, this is one of those cases where you don't necessarily want to simplify accounts by rolling them into an IRA. You'll want to keep that and maintain that account as it was registered with the state. You can change the investments, you can do what you want with it, but it should stay at the employer account if you're able to do that, so that you can, in the future, if you need it to be removed from your assets and not be countable as a resource, you can potentially have that preserved for your future needs. And if taking employer benefits that are offered are important to kind of be aware of when you're working, regardless of disability. So when we're talking about the EID, the EID only applies to the medical side of things. We are talking about someone earning more money, so their SSDI would likely drop away. But the benefits from working kind of replace not only the income that comes from the SSDI, but also increases the flexibility and the options that someone would have while working. So losing some benefits of SSDI may be outweighed by what an employer can offer in their own benefit package, including health insurance that would be on top of Medicare and Medicaid, housing and transportation assistance. We don't see housing very often, but transportation assistance is one that comes a lot. Housing, it sometimes applies to if you're working at a church, if you're working at a community living arrangement where you're either, as I did, I lived in a community group home as a caregiver. A lot of the time there's housing options available in that case, or a college where you're a resident assistant. Housing is part of the deal. 401k is definitely a benefit. It's even a better benefit if they do an employer match to what you contribute to the 401k. Long-term disability or life insurance are also options that often don't do a medical background, but when it comes to disability insurance, they're going to be any benefit that would be paid out would have to be related to something other than what you priorly kind of disclosed as a previous disability in your medical history. So disability from work would have to be oftentimes related to a work-related injury or something new that happens while you're working there, and not necessarily related to your experiences with autism in the past, your autism-related or complications that might come with your own body. It would have to be a new disability. Stock options are another benefit that some people have when they're working for larger companies. Okay, I'm going to go through this real quick. It is important to review withholdings for taxes and other employee benefits. And the reason for that, particularly for people who are on benefits, we're looking at the gross income. And gross income is what your company pays to you, period. Not what your company pays to you that you receive in your check. That's the net pay. So the net pay and the gross pay are two different numbers. Here we have the gross pay of $3,600, and here year to date, same time period, that is $2,744.10. So when we're looking at the substantial gainful activity amount, we're looking at the gross number. We're looking at the number that your company pays to you to work that doesn't take into account any taxes that you pay and any benefits that are deducted from your paycheck. So this that's just something to be aware of when you're towing that line of how much should you be working. It's not what you're getting paid by your paycheck. It's what you're getting paid total that you have to be aware of. So it's important to understand what you earn monthly prior to any paycheck deductions to make sure you're staying within your earnings needs. And that's really for any program that has an income restricted threshold. And we use the pay stub to make sure that spending and savings goals are consistent. So I'm going to be moving along here to saving and protecting income. So saving into an emergency fund and for future financial goals and for unexpected things are very important, regardless of who we are. Now, I'm gonna kind of pause my screen share so I can see where I have, yes, it's coming along. So I do have a slide coming up that I want to get to. So when we think of an emergency savings account, we think of the things that come up that we aren't expecting, but can maybe put some money away towards. So it could be car repairs, it could be, usually it's not hospital bills if we have Medicare and Medicaid. Sometimes it's the rent going up in the apartment that we're living in, and it could be an unexpected change in work, particularly if the management changes and they don't understand kind of how to work with you and what your needs are. So emergency funds can kind of help you be prepared for the unexpected things. When we have benefits that we're thinking about, the place to save into an emergency account is going to be an ABLE account. An ABLE account is going to be where you can put money over and above $2,000 and not be counted towards SSI or Medicaid. Again, those are the two programs that have the asset, the countable asset limits. ABLE accounts are, you can put money away from your earnings. Other people can save money into an ABLE account for you. And it's a way to really protect government benefits and still be empowered to use your own money. The ABLE account can be used for a large variety of things, including education, housing, transportation, employment, training, personal support services, assisted trading, technologies, medical expenses, and financial management. All of the ABLE account legislation kind of brushes a wide scope of what can be used to support someone in what expenses can be taken out of an ABLE account. And it's really anything that contributes to the inclusion of an individual with a disability in their in society. And so that's pretty much anything. Two things that I usually say are not included are things that are illegal. You don't want to pay for illegal things out of your ABLE account. You can use your SSI to do that. And things that are really detrimental to your financial state. So if you wanted to, one example that we usually give is there was a church that was helping an individual with their ABLE account, and they asked if it would be okay for the individual to gift the church a gazebo because the person wanted the church to have a gazebo. That's not appropriate. It would not be appropriate for someone to buy a large building out of their ABLE account that's not really impacting them per se. It's something that they want, sure. It's something that they want to contribute towards, but it's inappropriate for them to buy the whole gazebo for the church and not even for their own kind of living. So that's kind of the thing that we want to use as a frame of reference of what's appropriate and what's not. Gifts are okay because we want people to be included in society and celebrations and everything. But a gift like a gazebo to a church, it would not be within the right scale of and it would probably be detrimental to the individual's financial security. So who's eligible to open an EIDL account? Individuals with significant disabilities, ones that have a disability that have an onset of 26 or younger. So there is legislation that exists and it is moving forward, but it has not been approved yet, that people with a later onset of disability can open an EIDL account. You don't have to have your diagnosis before 26 to open an EIDL account. You just need to have documented representation from medical records, from school records that said you were struggling at a certain point before 26. And oh yeah, by the way, maybe you have a diagnosis that qualifies you with a disability. Mental health is a big one that sometimes progresses over time, but it isn't always caught until later in life. Those people will still be eligible for an EIDL account if they have documentation of their first symptoms prior to 26. So receiving benefits from SSI or SSDI automatically allows someone to open an EIDL account. And those are not, you don't have to be receiving these benefits to be eligible, but it is easier to apply for those benefits. Maryland does require, when you open an EIDL account in Maryland, to have the medical records verified by 2 doctors when you're opening the EIDL account. So you'll need letters basically stating that you do have a disability, and it doesn't matter if you're on SSI or SSDI to be eligible to open it, but you would have medical records that you have to have verified by 2 doctors. There's a hierarchy of who can open one. It's the beneficiary themselves, so the person with the disability, parent, a legal guardian, and an agent under durable power of attorney. And it's always easier to open it yourself as the person with the disability than for one of these other people to open it, because it's just a lot more processing time. And it also gives you the power to use it more fully if you're able to do that, even with supports. Okay, so you're able to contribute $17,000 a year to an EIDL account starting next year. $16,000 is the amount for this year. And there's also this additional $12,880, $12,880 that you can contribute on top of the cap for this full amount, $28,880 for this year. Now, I don't know anyone who's receiving SSDI who could actually do this fully by themselves, but these contributions, the $16,000 a year, could be gifts from other people and even gifts from employment. Sometimes people will make contributions to an EIDL account on your behalf. That all includes that. But even if there is anything above that $2,000 that you're able to put away, the $2,000, I'm thinking again back to the Medicare, Medicaid limit. Anything that you're able to put away into an EIDL account is going to give you a little bit more flexibility of when things show up unexpectedly in your bills, and you're able to have a little bit more control over the unexpected things, even if it's just $100 every other month that you need to take from the EIDL account. It'll give you a lot more flexibility to do that. So here's Jimmy again. Jimmy opens an EIDL account. He feels good because he can be independent and spend money from his debit card that's associated with the EIDL account. He can still save for emergencies now that he has the EIDL account. and his financial goals while protecting his valuable benefits. And he can also save into his work plan to get the full benefit of a match when he is on the EID program, as I talked about earlier. Okay. So reducing financial stress is a big one, and I want to get through this pretty quickly. We definitely want to address budgeting as a big picture item, thinking about budgeting as only spending what you have to spend and not spending more. When we think about budgeting, we think often about the goal of having 50% of your income for your needs. Now, that's not going to work for everybody, but if there is a greater need, then maybe reducing the wants from your list of how much the wants will be. So 50% for needs, 30% for wants, and 20% for savings and paying off debt. This is the goal. It's not going to work for everybody. Again, needs might be 80% or more of what an income is going to be, and the remainder might be for savings or debt payments. And the wants are going to have to kind of really be, you'll have to be critical about what is actually a want and what you can do on your own. But this is just one goal, the 50-30-20 rule of how to be within a budget. And you don't have to be specific about how much you're spending on each category of spending, like groceries and movies and insurance, but just keeping these big picture items in your awareness is going to be helpful to maintaining a safe budget. Preparing for the future is always something we want to be aware of. And so I kind of spoke about this a little bit earlier, but savings is definitely one thing that we address. Financial plan is something that people who have more resources have the ability to seek out. If there's an employer offered retirement benefit, sometimes there is a financial advisor accessible to your office who can talk about savings goals and investment goals and how to do that with your work plan. And there are other employer offered services like legal supports or financial supports that you could address there as well. Now, there are a couple of other income-driven supports that I wanted to address. So there's SNAP, which is the food stamps program, housing support programs, and living with friends or family is still a housing benefit that you can reduce the expenses of what you'll need to pay for housing. That wasn't a big slide there, but it was a big slide, but I have a couple more to get through and I want to make sure I do. And I'm sorry for not having too much time after for questions, but wanted to make sure that I address this final topic of building your own circle of support on your own terms. Most of this presentation was about government benefits, and I wanted to kind of make sure that everyone's clear that not all who have a disability need benefits. And this is one of our favorite memes here. So there are some people who are going to be independent, disabled individuals' success with the right supports. The right supports can be anything. It doesn't have to be a government program. Lawyers and financial planners will often say, you know what, you need government supports. But assuming someone has the need for supports like government benefits doesn't necessarily actually mean that they need government supports. It's always important to get the transition support that you need to have flexibility in income, to have flexibility in medical support, but not. And the EID program is very strong for people who want to be employed in Maryland and keep their Medicaid. Medicaid is something that you can have for a long time without losing it if you're following through the right steps there. So for others who work, the path forward is up to you and what you want and need out of your financial goals and how independent you can be. And staying on benefits is a very personal, medical, sometimes emotional, and financial choice. So identify the supports that you need. This is another fun meme that we always throw in. I still don't understand how the stock market works. And at this point, I'm afraid to ask. We're all afraid to ask about things that we're unclear on and that scare us. And that's in any area of our life. What can be done with the support of friends and family? What can be done by connecting with other communities, and specifically communities of shared special interest? That's a lot of the time where people will find employment, is connecting with the people that care about the same things that you care about. And what can be done best with a professional team? Is it important for you, and would it be helpful for you to have a social worker in your home, or to give a call to every once in a while? Do you have attorneys that you can go to when you have a question about something legal or work related? Do you have a financial planner who you can ask financially related questions to? Are there designers, coaches, house cleaners, and handy people who can help you organize your own life in the way that it needs to be so that you can get what you need? It doesn't have to be a government program. It doesn't have to be a state-run agency. It could be some community like Pathways that's offering these supports, but it could be just the people who are around you who know how to do these things, who can kind of fill in the gaps for you. And the last one really is the legal and estate planning. So this is another silly one. Hello, fellow teenagers. Of course, he's not a teenager. Let's all make sure our parents are doing their estate planning for us. So this is another comical thing, but very serious as well. Wills, trusts, powers of attorney, beneficiary designations all need to be reviewed to make sure that benefits are protected. But also at a certain point in time, there are things that you will want to make sure you have for yourself. And if you have an ABLE account, Maryland, there's a chance that you'll have assets at the end of your life as well. And you'll want to think about who you would like to leave your assets to at the end of your life. You should be thinking about who you want to be helping you making medical and financial decisions if you're not able to make those decisions for yourself. And you should think about instructing your loved ones to do how you would like to be respected and treated when you're gone, just as your parents are doing. So with that, there's a quick, long presentation, but I wanted to kind of share that all with you. I'm going to address some of the questions again. What does the EID stand for again? And I'm going to go back to that slide specifically. I think it's, I'm not even going to guess because all these acronyms are related, but not quite the same. Okay, so that's the Employed Individuals with Disabilities Program. It's called a Medicaid buy-in program so that someone can make minor payments towards the state to maintain their Medicaid benefits. ABLE is a Medicaid payback account, not in Maryland. How about using a 529, which isn't a Medicaid payback? So in Maryland, there is no longer a Medicaid payback. It's been updated to not require that. You can use a 529 for college savings and education savings. We do recommend a lot of people do that, but that's only going to be functional for someone who has those education goals. You can roll 529 assets into an ABLE account up to the contribution limit for the year, but that's restrictive again. So to that $16,000, $17,000 a year. So if there's substantial savings in a 529, it'll take some time to move it to the ABLE, but there's no Medicaid payback in Maryland anymore. What's the difference between an EIDL account and a regular checking account? A regular checking account is in cash. An EIDL can be invested in different mutual funds that Medicaid, not Medicaid, EIDL program allows people to invest in. And it's not run by it's not run by a bank. It's run by the state and the institutions. You go online to open that account, and it's really done through online banking contributions. Okay, that's all I have for questions right now. I'm gonna put this last slide back up of my contact information. If you do have additional questions and you just weren't able to think of it right now, if something comes to you in about 2 days, feel free to reach out. Here's another question. Can autistic individuals that are able to work regular full-time hours open and use an EIDL account? So that's debatable. The expenses are technically supposed to be used for disability related expenses. So if they technically don't have a medical related disability, then they would be a disqualified expense. So not a disability related expense. However, there's no real penalty for those expenses as long as it's the basis of the account that's coming out. So if someone contributes $5,000 to the account and decides that they're not on disability benefits anymore and they want to take the full $5,000 out, they can do that with no penalty, even though they're no longer qualified as a disabled person. So it's just the growth on the account that would be counted towards that requirement of it being a disability work related, not disability work related expense, but the qualified disability expense for the EIDL account expenses. And what is the website? Somebody put up the website here. I'm going to say it out loud so that you have it in the recording. It's www.marylandable.org. And I think there may be one other. No, I think that's it for now again.
Thank you so much, Liz. That was great. So much great information. So we have it recorded because I did remember to hit that button. Yay me. And I will make sure to email this to everybody who was in attendance so you can have it. It's also going to live on our website. I don't know if we're going to get the PowerPoint, if I can share slides or whatever. We'll get what we can and send it out to everybody. Thank you guys so much for joining us. Keep checking out our website for more. I know that the webinar for modern money is up there now. You can register for that, and that'll be published on social media, put out in our news and notes, and everything else. So thank you all so much. Liz, thank you so much. This was great. Everybody have a good night, and thanks so much for joining us. Take care.
Thank
Good
you.
night.
Take care.